Good morning. Good morning, good morning. Also at home or at the office. Like I just said, I'm Diederik van Thiel, entrepreneur from the Netherlands, and very passionate about AI and especially the intersection with behavior. That's what I'm studying and how the technology developments like AI and blockchain and Gen AI influence behavior, and especially behavior of next generations, and how they jointly influence also the journey I would like to take you on in this 20 minutes introduction that I may do. So the introduction already about my personal life has been done, so I can skip this. Before I started as an entrepreneur, until 2010, I was in the board of ING in the Netherlands, also a well-known bank over here in Poland, responsible for retail banking. And next to my entrepreneurial and university work, I'm non-executive director at IKEA Bank, Icano Bank, also known in Poland, and at Icano Insight, that's retail analytics for IKEA in London. But let me now take you to the content of what's driving change. What are the change drivers that we really have to take into account when we work every day into receivable finance? The first, of course, is that we are facing the outcome of the next generations. Next generations are millennials, Gen Z, Gen Alpha, all people actually younger than 35. And what's very interesting to know is not only that they are a huge cohort, 5.5 billion people on Earth, out of the 8 billion that we have together. So super interesting opportunity also, I think, for us. The most interesting thing is their behavior. They have completely different demands on how they consume things, how they shop, and how they use their financial services. Their financial behavior is driven, of course, by digital. They are digitally native. They grew up with their mobile phones. That has a lot of advantages for them, but also a lot of disadvantages. But what they demand from us in financial industries is that we bring instant, micro-personalized and transparent offerings to them. Click and buy, click and do. And that's something I think that we are far away from yet. Also, that comes in with other demands like digital security, privacy matters, the other side of digitalization. So I'm trying to challenge the people and the companies I work with not only to think about how to digitalize their processes, think a bit further, think on how to engage the next generations in your offerings by using digital. It's not about digital workflows only, it's about the customer engagement. For these next generations, what also is very interesting to understand is that they buy sustainably. So you have to be a force of good in this world, not only after earning money yourself, but they are also highly entrepreneurial. 60% of these people under 35 start their own businesses. And that's what it becomes interesting for us in the receivable finance industry, because they need working capital, they need leasing, they need growth capital. That's where the opportunity comes. Then the other thing I like to study is the tech opportunity, because tech changes the behavior. Last year, $20.6 trillion has been invested globally in digitalization. And out of this $20.6 trillion, $1 trillion was in AI. And we are only at the beginning. The expectation is that this will shift tremendously. But realize the impact of these amounts and also think then on how much of your profit, your earnings you invest yourself in digitalization and AI. Usually a very limited part. The reason why companies are doing this is that they see a future arising. And that's what you see on the arrows. So we come from a very traditional way of banking, where we worked in offices, where we had relationship management, and where personal judgment and slow processing were kind of the cornerstones of banking. Now we stepped into the banking 4.0 world, where it's more about omni-channel, automated underwriting, fast processing, data-driven decision-making, and high innovation power. That's also why it's important to invest in innovation, to invest in AI and new technology. But this is not the only reason that they do it. The actual reason that they do is that they see a shift towards banking 5.0 arising. Banking 5.0 is being defined by hyper-personalization. I want an offering for me in the context that I work that fits at that specific moment. The other thing is that you need these offerings to be delivered together with others in ecosystems. And that's also placing high demands on your technological infrastructure. You need to be fully API-based and instant to do this. It's about digital underwriting, instant processing, AI-driven underwriting. Who of you is already using AI in underwriting? Nobody? No? And continuous innovation. So not only spending 30, 40, 50% of your budget in innovation, but making sure that your processes make that it becomes continuous. Let me show you a small video on how this future world could look like. Can someone start the video, or do I have...
Over the last year and a half, a lot of us who work in offices have gone remote. And while I miss seeing the people I work with, I think remote work is here to stay for a lot of people. So we're going to need better tools to work together. Let's take a look at what working in the metaverse will be like. Imagine if you could be at the office without the commute. You would still have that sense of presence, shared physical space, those chance interactions that make your day all accessible from anywhere. Now imagine that you have your perfect work setup and you can actually do more than you could in your regular work setup. And on top of all that, you can keep wearing your favorite sweatpants.
Looking good. Let's get together real quick for a debrief.
I'm free now. Let's jump in.
Hi.
Hey.
So what do we think?
I think it's ready.
Great.
I'll prep it for the presentation.
All right. Good luck.
Imagine a space where you can tune out distractions and focus on the task at hand. And when you're ready to share what you've been working on, you can present it as if you're right there with the team.
Wait, where's Mark?
I think he's in the middle of something.
It looks a bit weird, perhaps, but can you imagine that if these kind of worlds are going to be here, how the impact will be on financial industries? Because there are a lot of things in this little video that needs financing. And financing moves to micro-personalization, like I said, and on the spot in these kind of environments. But to be ready for this, your tech infrastructure must be ready for this. And that demands a lot of things. So to summarize the first part, the case for change, and why we need to invest in AI, and especially in Gen AI, is the behavioral change next generations bring to the world, is the AI tech explosion, and of course the macroeconomic cost pressure accelerates this, makes that we advance by reducing costs through digitalization. But my challenge again is think not about cost reduction, think about engagement, because that's where the real game is going to be played. This all has huge impact on your business models. First of all, we are going to be challenged from the West. Big tech moving into financial services in a completely different way than we are doing. Amazon, for example, is granting loans to the suppliers on their platform. They have so much data from these suppliers that they don't need to do a credit check. They can just invite people, invite companies, and grant them a loan. PayPal is doing the same thing. The others are following. The thing is that because of the data explosion and the data that they can access in the commercial behavior of these companies, they are able to change the processes. They are able to change the customer experiences, making invoice financing as one of the things from reactive into proactive. And the benefit of it is that they are only picking out the best customers in the market, leaving us with the rest. So the value is slowly shifting away to these kind of tech giants. Very targeted. From the East, from Asia, we're going to be challenged by the super apps. Last year, when I was in China, I was very much inspired by Alibaba and what they're doing with their bank and financial. You see a picture on the screen. They integrate all kinds of services in one app, and they call that a super app. Whether you have to book a taxi, do your shopping, want to have a loan, want to have an insurance, want to buy something for your house, it all is the same app. It all is the same data lake that they access to deliver the services in a very micro-personalized way to you. The other interesting thing of these kind of business models is that they are not focusing on financial services only. Especially with the bank and financial, they are so good in credit scoring that they deliver that service to their customers as well. So it's not only delivering finance, no, we are mastering credit decisioning, so we also sell that solution. And of course, they sell more than only loans. They sell credit cards, credit scoring, insurance, wealth management in their financial package. But everything micro-personalized at the moment that you need it. And then from banking, we also see a big shift over here. The outperformers in AI investments today, or actually I must say last year in 2023, got over 20% of their EBIT driven by AI. JP Morgan is one of them. And JP Morgan, the lessons from JP Morgan is that if you want to be such an outperformer in AI, you have to go full in. It's not trying a little bit on the left or trying a little bit on the right. You need to get full in. Last year, JP Morgan invested 12 billion in AI only, and they hired 50,000 AI specialists, driving their transformation. I know for smaller companies, that's impossible to follow, but think about the percentage, again, of your annual investments that you spend in AI and in new technology transformations to engage with these next generations, because that's what they are after. Customer engagement with the young people. And then the third thing, so from the West is the big tech, from the East it's the super apps, from banking it's the big banks who are doing the platform transformations. We have the neobanks and fintechs, like our company AdviceRobo, who built these kind of platforms that enable instant micro-personalized servicing. This is the architecture of the AdviceRobo platform, where we connect with over 80 data sources to do credit decisioning, to do targeting, to do customer engagement-like solutions. And this is all instant in automated data pipelines that, that can easily replace traditional ways of working. These kind of things from the industry are now changing the landscape very fast. And I'm presenting them because I hope it inspires you to direct also your investments. Not only to invest more, but also to direct in the buckets where you think that you can make the difference. Because this is a graph from the SME Banking Club to the state of digital factoring in CEE. And then you see that we have a long way to go still. And not only in CEE, we see the same kind of percentages in Western Europe, and to be honest, also in the US. But in small business lending over here, there were 76 factoring companies looked at. 27 offered a partially digital process, only partially, but they are the front runners in this market. 17 offered a full digital process, and 0 and I repeat, 0, offering a personalized AI process. So I'm challenging you to go back after this day, back to your boards, and rediscuss for the rest of the year your investments, because this needs to change if you want to keep up with your customers and with engaging them in your business. To summarize the second part, after the case for change, we looked at the business model revolution. What we see is that the impact of tech and next gen is on embedded finance, offering financial services on the spot when you need it. Platform banking, fast, cheap, and with many more opportunities and possibilities than in traditional processes. And AI automation platforms that help you transform your customer experiences faster than building them yourselves. And now the topic of this speech is AI leadership. So what is the impact on you as leaders in receivable finance industry? What we see in research. The first thing, there are 3 things. The first thing is that you need to have vision. And if you don't have vision yourself, surround you with people that do have vision, that do dare to think outside the box, outside the traditional regulation type of thinking that we are very much used to. In the Netherlands, we have a bank called Bank, who's the first AI-powered bank in Europe that scales very fast. It's a unicorn. And the thing they do really well is build the bank of tomorrow. They continuously think about tomorrow and are building that. More in general, McKinsey, of course, does a lot of research to the state of AI and Gen AI. More in general, what we see in these kind of researches is that there are 2 types of benefits seen by leaders in the world. On the dark blue side, you see the opportunity of cost reduction across many, many drivers in your value process, from service operations to manufacturing to risk, whatever. The outperformers, like JP Morgan and others, they also see on the other side the revenue opportunity in service operations, in marketing and sales, in product and service development. And they are focusing a lot of their investments and efforts on revenue creation and value creation. From the same research, more specifically zooming in on banking, because that's our market, we see 4 things standing out over here. The first one is investments in marketing and sales when it comes to Gen AI productivity. The second one is in customer operations, which we'll see later. Chatbots are a part of that world. The third one is in software engineering, faster code development, faster documentation development. And the last one, of course, is in risk and legal. There's a lot of things you can benefit from in the AI scene when it comes to risk and legal, not only credit decisioning, but also in AML, cybersecurity, and well, I don't have to mention more, I think. So that's the state of the art in banking. Next to vision, you need to be able to work in ecosystems, not for your own benefit, but for the benefit of your customers. This is an example from Asia, an insurance company called ZhongAn, which is a joint venture between Alibaba, Tencent, and Ping An. Alibaba and Tencent offer access to a huge group of customers in their apps, in WeChat and in Alibaba. Alibaba delivers the IT system, and Ping An delivers the insurance knowledge. These together form a joint venture that delivers very small micro insurances to the world and do it in a very high speed. They launch a new product every quarter. A last example is, again, from my own business. The first company which I started after I left ING was a robo-mortgage advice platform in London and in Amsterdam, where we worked also in an ecosystem, both for our IT, but also we sold a long tail of insurances, mortgages, based on very niche segments like medics, like plumbers. We have specifically tailored products for these groups, And it was possible because of the ecosystem approach. And then the final thing you have to be able to do is smart risk taking. It needs vision, but it also needs risk to put the money where the mouth is and do the investments. In the larger banks which I was engaged with, they do that in a way that they work in an agile organization. So they changed the complete organization from siloed traditional way of working to tribe-based. In our current company, AdviceRobo, where we deliver the platform, but also all kinds of customer touchpoints, interactive customer touchpoints and digital advisors, we also work in an agile way, but we add a lot of research to reduce the risk of the things that we do. Research to customer behavior, research to technology, and research to a lot of privacy tech that's coming to the world. So to summarize, for you as leaders in this world that need to lead the transformation, it takes vision, it needs ecosystem collaboration, and it needs intelligent risk-taking when you look at where you put your investments. So to summarize, I took you on a journey in 3 steps. First, the case for change, driven by next-gen behavior, by technology, and by microeconomics. The impact on business models. Digital business models, of course, are rewriting the playbook at the moment. Don't think only in digital processes, think in digital engagement. And last, but definitely not least, for you in your behavior, it needs vision, it needs collaboration, and it needs smart risk-taking. Because the power of artificial intelligence is not in replacing what we do, so you don't have to be afraid, but in enriching, enhancing what we can achieve together. So let's build this future together and embrace the next generations. Thank you very much.